Welcome to the StockOptionAssassin.com weekly video for swing trading options. Today is Friday, July 20th, 2012. This is Eric. We're taking a look at the spiders. We still have about an hour left in the day, but I'm going to go ahead and get the video over with. I'm highly doubting a afternoon strength rally. You can see, just as of recently, we had this nice move up, and we're having a little bit of a pause day yesterday, and we are reversing today. So this is a classic evening star candle pattern for those that are interested in candlesticks. So we did get that over the last couple months. We've been looking at this kind of rising channel, which is to me is just looking like a massive bear flag. I am biased to the downside. However, I think there may be a little bit more upside. I don't know if that this is going to be. I'm not convinced that yesterday's candle is going to be the near-term high. We may sell off into next week, but if we do get some more positive earnings, I'm thinking we may actually be able to hit this top channel one more time, which would be around 139. That's actually where I'm looking to short, and we'll go over some Fibonacci levels here in a few minutes. But basically, over the last few weeks, we've been in this uptrending channel, and a couple levels that I want to point out. Let me grab my fib tool here. Is originally our high of the year is 142.21. So when I bring a fib down there, you can see that we did get up to the 618 level. This is you have previous structure resistance here. The previous support is now going to become resistance. So this was a little bit of an obvious level to look for shorting. We got back to the 382, had a little bit of a swoosh below, and now we're kind of moving back up. So what I like to do now is, now that we have another kind of big leg to work with, and let me take the channel lines off here. So this was the big leg. So now we have this other leg here from this low to this low. So we had this move up that took out this pivot here. So now this is a good leg to work with. And then we had a 618 retracement of this leg. And now we're kind of broken out. We pulled back. We're breaking out. And I still think we're going to hit this 27 extension. And another factor for me that this is where I want to short, and right here it's 138.73. But if I bring in another fib on the original down leg from the high to the low, I'm going to bring in the 786. See, this coincides here as well. So you have 138.98, 138.73. This is the area I would really like to get short at. Now, I don't know 100% if we're going to get there, because we are having a little bit of reversal today. But if we do kind of pull back, maybe you look for a 50 or even a 618 retracement of this leg, and then potentially move higher. So the next week or so is really going to kind of tell. If we kind of break through and even retest this low, I would change my bias and I would look for a retracement and start shorting closer to the 136 area. So as of right now, this past week in our the market timing service for our swing trading option service, we did take a few long trades, and let's take a look at a couple of those now. One that we're actually still in is Abercrombie and Finch, and I'm going to bring in some indicators here to kind of help us out. Abercrombie had kind of this rounded bottom, had a little bit of a squeeze here. A wave is above zero. We pulled back into the mean here, and we've kind of just been churning higher, getting some resistance right here around this 36.70 area. We closed half of our position already, and the market is kind of seeming weak, but Abercrombie is actually going positive for the day. So if we do get a little bit of a bounce next week, I'm looking for ANF to kind of break out here, potentially go to this next tiny gap window, which would be about 38, we'll call it 39. Ultimately, I think you might be headed to 42. I just don't know if that's going to happen before the market turns down. So I think this is obviously trading separate from the market. If you just look at this pattern and you look at the market, the pattern's different. So this is something that may be able to buck the trend, but we'll have to kind of take that one day at a time. So another one that's been on the bullish side is Disney. We took a trade in Disney right around here. We kind of broke out. We got the $50 round number resistance, just shy of that. We closed half the trade up here for a decent gain, and then we closed the other half. I did not want to hold this through a market pullback, but Disney's still looking to the bullish side here. So coming up this week, what I'm looking to get in short is I have two short plays. One is Citigroup and ticker symbol C. This actually was breaking down before I thought, but the play here for me is you're trading below the mean here. The mean I have is a 13 EMA. You actually were in a squeeze. Both these indicators are kind of, right around zero. This is below zero, and this is starting to turn down. So what I would actually look for next week is a pullback back up into the, let's call it 2650 area. If we can get back to 2650, I would take a little bit of a position here, and potentially if we retested these highs at 2750, I would add to the position, and I would look at some August puts here, probably right in the money, 26, 27 puts, and I would look for a move to take out these lows. Target-wise, your first target obvious would be around 2450, but if this can break, you may be able to get a move down to 22. So that's what I'm looking at for Citigroup, ticker symbol C. The other one is Home Depot, HD. We actually tried to get long HD, got stopped out this week. This thing was kind of in a squeeze, and as soon as we got back above the mean, we took a long trade, and then we took out these lows and we got stopped out. So our stop was pretty much here around these lows, around 50, call it 51, and we stopped out on this candle. So now you have this little bit of kind of a micro bear flag here where you have this, hold on, let me grab the right tool here. You had this move, and now you're kind of, potentially bear flagging here. Both of these indicators are continue to push lower. So, I want to see how Monday opens up. But if you get a pullback to the mean here around 51, I would just call it, 51.25, 51 and a quarter, right in this range. This would be a decent short. And HD, I would also look at slightly in the money, maybe a 51, 52 put. You could also sell a credit spread. I would sell potentially the 50, 52 and a half. I don't think there's any August 52s, but I think it's 52 and a half. But again, you have this little micro bear pattern. Indicators are pushing lower, and you're going to have this a little bit of support around this gap fill around 49. But if this thing can really get going to the downside, you're looking at 46 and a half here for double bottom. Potentially a little support right here around 47 and a half. So those are the two short ideas. I would like to see how Monday opens up. Let's look at the spiders again with the indicators on it. Let me take all this these drawings off so it's not too sloppy here. So indicator-wise, what I'm noticing here on the A wave is, this kind of bearish divergence here where the indicator continues to make lower highs, lower lows, whereas the market is making, higher highs and higher lows. So doesn't mean that this pattern can't continue to go higher with this lower, but at some point this is going to roll over, and I'm expecting us to get back to the 130 level at some point, which is about 1300 on the S&P. If we really, if things really fall apart around the world, let's just look at the moving averages. 1300 would give you, slightly below the 200-day moving average here. But ultimately you might be headed back to this double bottom, which is around 128. So as of right now, you are trading above the moving averages. You're trading above the 13 EMA and the 20 simple moving average. That's the yellow line. So any pullback here and bounce, that's kind of what, I would love for that to happen. Bounce off the moving averages, get up to this 139 area, and I would start, either buying in the money puts or selling spreads. We were trying to look at the 140, 142 bear call spread. We didn't get filled in that because we turned down. We were looking for a move a little bit higher, but that's kind of how I'm looking to play this. I think call spreads, bear call spreads will probably be pretty good, but I would not initiate those until we got back up here. Now, if for some reason we just break down next week and get to this lower channel here, I would look for a potential retrace to short there. So we'll see how that goes. Option expirations kind of adding to the volatility this week. So I think earnings are going to be a big factor as well. So that's all I got for today. If you guys have any questions, let me know, and I will catch you next week.